Hello everyone. Today I'm going to show you how one stock can make so much wealth and money for you over the course of your life that the one stock is enough to retire comfortably, and you don't need to start with a very large amount. You can start in small amounts and eventually it will turn into a very large amount. Now, this is something that's always discussed, by all those schemes that they offer you, like insurance schemes, covers, and all, where you build money over time and you do savings and you earn a cost of capital back at like 8% or 7% or something. And over time, it builds up. You can do this in the PPF, you can do this in a lot of schemes. But ultimately, ultimately these are just lenders of that money in some other projects which use that money and end up growing. So you want to grow a lot more than that. And what can help you grow a lot more than that? It's nothing but equities. Because what are equities? It is investment in a company, investment in a business. Now, these companies, the ones which are successful, from small they go to big, and ultimately they make so much money for you over the course. As they get bigger and bigger, you get wealthier and you can retire rich. Now you just look at the screen here. We're looking at a starting capital of 10,000 rupees, whether it was 1990s or 1970. And we're taking three cases: Wipro, ITC, Infosys. There's more cases also. There's HDFC Bank, which came, then there's Asian Paints. But we'll consider these three stocks because we are taking a very long time frame. It's 30 to 50 years. But you can just imagine like this 100 shares of Wipro, which were bought in 1990. You just see the trajectory over time. The split, there were bonuses, there were dividends. 100 shares became 1,000 shares in 1997. It became 18,000 shares in 2004 and around 60,000 shares in 2010. Today, you just look at the number of shares you would have. The initial 100 shares would have split and bonused and divided into various parts and quantities and become almost 1.5 lakh shares. The value today would be 3.5 crores of that 10,000 rupees, which is quite a modest investment. Even though it's 1990s, it might be a bit higher compared to modern day investments. But you just look at it, 3.5 crores and dividends approximately 1.5 lakh coming in the year. So isn't that awesome? Like you get 15 times your money in 30 years back on just dividends. Now, this is really amazing. This is an example of one stock that helps this thing. And if we just go and look at the chart here, let's see how far back this can actually take us. 1 month, you see there were falls and whatever else happened. Now, okay. So Zerodha charts sort of stop us here, but you can see these lows of 25, we see at the crash, it comes again down to 40. And now it's trading somewhere in the high 600s. You can look behind my video. So you can just see even from that time period, it's gone up at least 15x, like in the last, let's say 13 years or something. So that's amazing. Now the key to watch out here is that you don't, start selling the stock when you make immediate profits. Long-term wealth is given by constant compounding. This compounding has to keep happening over time. So keep your trading capital separate. And when you're investing in these quality companies, keep that separate. It's very, very, very important to understand this because this is how most people are not able to make long-term wealth. Now, why do they do that in gold? Why do they do that in property? Why are they able to do that in land and some of these assets? Because they don't sell them, they hold through the bad times, and then they get the benefit. Like, in a place like Mumbai, where earlier you could only build 3, 4, 5 floors, now you can build 15 floors. You can even go up to 50, 60 floors where your coastal zone is far away and you're not near that area. So these things come and you get the benefit of that. Now, these things come a lot more in the life cycle of a company. Like a tech company, there's new technology. Let's say something like AI comes in, they'll get the benefit of that. They're going to get business. Now, here is when people have gone wrong. They've held on to real estate, which has grown a lot slower and which has definitely given a lot of money over 30 years period. It will give a lot of money and it's a larger ticket item, but people have sort of seen it as a safe haven and as a place to store their money rather than invest in equities, deeming them too risky. Here is how I show you how one stock is enough. Let's go and look at Infosys. A similar story, like if this chart will come up, yes, you just see the similar story being reflected here. How far back does Zerodha go? Okay, here it stops. 50 to like 1700, just amazing in 20 years, like an easy 30x on your capital. Now, let me just come back to this sheet. So Infosys 100, 1600, 25,000, approximately a lakh. It's gone to 11 crores. Dividends, I could not find it, but 11 crores, your initial investment of 10,000. Like in a period of 30 years, this has given you so much money. So the idea is be disciplined, do constant investment in stocks like this. And then we have ITC also. In the 1970s, a 10,000 rupee investment during IPO or whenever that period is, like today, the value in 50 years is 22 crores and 1.4 crores in dividend. Just imagine that. Like you have so much money coming through in dividends, it can pay all your expenses. It can pay tuition fee for your grandchildren. It can take care of sort of contributing to that house you want, to the interiors of that house. Just look at the potential of it. And it just started by keeping money away and not looking at it. Now, these stocks have grown, they've become giants and behemoths. So people that invested in their 20s and 30s back in the day are reaping these rewards. But these companies are probably not going to grow and make people who are in their 20s and 30s today wealthy. So what do? If you just go, you look at screener. There's a screen called growth stocks. Like you don't even need to do too much digging. Like someone has very carefully put this through in this query. You just have the G factor market cap. Now, these are some of the stocks which people are not discussing. We haven't heard about them as much, but you just look at it. Uh, you see a company like, let's say, Ajanta Soya with a 200 crore market cap. So this is something that can become a 1 lakh crore market cap sometime in the future. A company like Supreme Petrochemical, 6,500 crore. So this is the way we have to find stocks and find companies that could be our one stock, that could be our claim to making it big in the stock market. And honestly, if you do enough research, due diligence, read enough books, you will definitely be able to find one. You are able to find that one property or that one asset that keeps you safe for the longest period of time. I'm sure you'll be able to find that stock also. But the problem is we keep churning, we keep getting impatient, we keep going in and out, and we sort of sabotage this own process for us of this long-term wealth building. And honestly, a lot of the times the answers are right in front of us. If you just take the case of MRF, I'll come here, look at MRF on the charts. Okay, now let's go back and see how far back we can get numbers. Yeah, it's sort of at this insane level right here. We just try and see, it's like around 80,000, just really insane. But if you come back here from when Zerodha has the charts, so around 1,000 rupees, it's gone 80x from 2003. Now, just think about it. Cricket is a very popular sport in India. MRF was sponsoring bats. The bat of Sachin Tendulkar from 1997 to 1999. The answer was right in front of you. You've just seen that MRF, yes, it was a good company at that time. Tires were growing and that business was growing. You would have known this could be my company. And there are people like that. There was one person who came on CNBC and said that, I had invested probably a lakh or two, like back in 1990s, and now the person is sitting on like a few hundred crores. So the whole idea is you can find that one stock and it can be your one wealth grower through the course of your life. The idea is you need to have patience, you need to set money aside constantly, and you need to not look at it, because and you will make mistakes, because I'm sure if you pick 5-10 companies from that, maybe 80% won't make it, but one or two will make it. The only thing is you need constant discipline. And if you just look at how India is evolving and growing, don't look at the industries that made it till today, like the Asian Paints, MRF, Infosys. Look at what's going to grow. Like today, people are moving sort of away from owning real estate, maybe, They're spending more on maybe their healthcare. They're spending more on consuming products because services are sort of limited because of the lockdown. Look at the growing theme there. What's happening? What's growing? And this will help you identify stocks that will, take care of your life and help you retire rich. I hope all of you have learned something, and I hope it's an impressive video. And if you're interested in a course, we do have a course that we offer. So do contact us and let us know. Thank you so much for watching, and I will take your leave right now.